generally speaking, our transactions are in a band of, 1 to, $30 million with some large projects kind of outlaying that, pushing that, range up. But really, I think the $500,000 million and up, generally speaking, that's where most people, tend to be interested.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Ethan.
Ethan, thanks for joining us. So really, what would be kind of a con of why wouldn't be a good fit? I mean, most of the time, it seems like it's ideal fit. I guess if the developer or sponsor has really cheap cost of equity. I mean,
right.
Maybe if they're an institutional level, but not many people have that.
Right.
Mm-hmm.
Yeah, I think, I think, if you have, to your exact point, if you have less expensive cost of capital, I'd be the first one to say, good for you. You should be using it. Why are we talking? Now there may be some reasons why, maybe there's a recourse concern, right? Maybe there's, dilution of your own, equity, but chances are, as we see it, if you've got access to that, that's going to be, your first choice. I think the con or the catch, and again, to your point, it's not necessarily a con. There are a lot of moving pieces, and sometimes it does take a while to put the pieces together if the city is not part of a special improvement district, if you're very imminently closing and it's hard to interrupt that process. I think what people often get hung up on is that we have to have the construction lender, the mortgage lender, comfortable with our participation. And people see that as potentially sometimes very challenging. And and I'll say that's a lot of perception. And one of the things we do is work with lenders every day to get them comfortable. Just yesterday, we got a yes from a new lender. Most of the lenders we interact with have never done a PACE deal or don't really understand what PACE is. So a lot of what we do is education. How does it work? How do lenders get comfortable with it? And if we can have a conversation with your lender and we can, work them together, chances are that we can get them comfortable if we have that opportunity. But some lenders will have a knee-jerk reaction or, well, I've looked at this, I don't like the structure, but this is really a solution where the devil's in the details. If we haven't talked to your lender, I would just say, give us that opportunity, because when they hear the details, then there's many things that they like to hear and don't necessarily know just by hearing, property tax assessments for energy improvements.
And I think it's important for people that are watching that there is probably a better way to do this dance, and that's to directly reach out to PACE Equity. Because if they get engaged first, they not only have experience with 200 plus lenders that they've worked with, but they can make the introductions, which a big piece of this that I see that goes wrong is that they go out and get senior debt and then they look for PACE, right? And that's not the way to do these deals. You have to get the PACE equity piece first and then do the dance. And you'll have a much better approval rate, because what I've heard from bankers, well, first of all, a lot of bankers don't know what PACE is. They've never heard of it. And now I would say about 40 or 50% of the bankers now understand what PACE is. Now it's starting to, but there's still that big 50% of bankers that have no idea. And if they do know, they have misconceptions about it. Right. And I've never heard anybody explain the way PACE works, because a lot of lenders are worried that, oh, well, this is going to be an assessment through my property taxes. It's going to be senior.
It's going to prime me. Yeah. Right.
And so they don't really understand that if they really heard it from, I actually always say, Ethan has the best way of explaining it. And if you understand how it really works, there's really pretty much no risk for a senior lender.
That's right.
And actually, it's probably a safer investment for them because their loan to cost is substantially less than if they were lending a higher loan to cost. So really, there's many benefits, and
Right.
I think pretty much every lender you talk to, at least 8, 9 out of that 10 are fine with it after they hear actually how it works. And
That's
that
right.
brings me up to this topic. Can you talk about that it's not a lien like a mortgage lien, how the assessment works, and how do they pay this assessment essentially?
Sure. So, and that this is one of the topics that, really helps, mortgage lenders get comfortable with PACE financing. So when we close and fund, we provide our clients a fixed interest rate and amortization for the entire term, and the term and the am are matched. So say that's a, 25, 30-year, term and amortization at a fixed interest rate. It can never balloon, reset, reamortize, whatever the case may be. So it's a fixed payment every year for that whole period. Let's say, just to make up some numbers, that it's $1 million of financing, and maybe the annual payment is $75,000, just to, again, kind of make up some round numbers. So that $75,000 would be paid sometimes annually, sometimes semi-annually, with your real estate taxes or through a special servicer kind of at the same time you pay your taxes. And that's it. That's our only payment, is on that annual or semi-annual basis.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you looking for capital for your business? Whether you need to get new equipment, finance your accounts receivable, raise working capital, or acquire commercial real estate, SBA Exchange can help you get approved and funded. SBA programs can also fund ground-up construction projects. The process is simple, and the initial consultation is free. Simply book a call. An advisor will call you at your desired time. We have built relationships with the top SBA lenders. We know their lending appetite. We will source and connect you with the appropriate lender. You will not waste time trying to figure out who to apply with and how to get started, and follow the process through to completion. We have streamlined the lending process from A to Z and work with you on all forms and documents to expedite your loan approval. SBA Exchange is the marketplace for SBA financing.
The really great thing, Beau, is that in no scenario can we accelerate payments, principal, put a lien on the building for that $1 million, say, principal balance. All that has to be done is just pay the annual or semi-annual assessment. It can be paid in arrears, and typically what sometimes happens if you're late on your taxes, that payment just waits, and then it can be caught up by you or the mortgage lender or whomever. But in no default scenario can we, unlike a mortgage, could we say, your $1 million of financing is now due, and there's a lien on the building, and we're calling recourse and all that. It's just that $75,000 payment for 25 years. And one other nice feature is that we can be prepaid at any time. So it gives flexibility to say, I had, this project for 5 years. I'm going to go sell it and pay off all my financing. But we can also be transferred, no cost, no, penalty, no re-underwrite, along with the land, kind of like an assumable loan, or say like a sewer assessment or something like that. So that whole, structure, again, gives a lot of comfort that, okay, I know exactly what my yearly payment is going to be throughout the whole 25-year term. I can underwrite to that. I can predict cash flow because of that. It's a very small portion of value on a yearly basis. So that really helps mortgage lenders to get comfortable that, okay, I'm not, say, ever going to be, there's never going to be $1 million all of a sudden of a surprise tax assessment. It's just this very predictable payment stream.
And I think that's important to note that this PACE equity financing is long-term, non-recourse. So essentially, if the senior debt is a construction of perm, they don't need to refinance upon stabilization. They can keep this long term if they wanted to. Now, a lot of the developers and sponsors do end up refinancing at stabilization because they, pay back their investors or whatever their structures are. But there's many options to structuring these. Now, what are your capabilities? Let's talk about like capabilities. Like typically, like a small sized financing deal would be about $700,000-800,000 on the very small side that we're doing, versus on the large scale, we have the capabilities of doing a $200 million project. So essentially, $40-50 million in PACE financing.
Yeah, I think everyone asks, what's the minimum size, and we can actually go as low as $100,000, project. The challenge, Beau, is that, there's always going to be, legal costs. And, as we all know about lawyers, the legal bill and the size of the project are not always, commiserate. So what we've seen is that it is somewhat in the eye of the beholder. We can do $100,000, $250,000 projects, $500,000 projects. So if you ask three people, some would say, I really need this, $200,000 to renovate my building. It's okay that the transaction costs are a little bit higher than they would be if it was $1 million, even though dollar for dollar, it's the same, but just from a percentage basis. So really you could just say it's $100,000 and up. Some clients would say, for the costs, and kind of, even though PACE Equity is handling the hoops, I'm still involved. There's another party to my, financing. So $1 million is a better fit. Generally speaking, our transactions are in a band of, $1 to, $30 million with some large projects kind of outlaying that, pushing that, range up. But really, I think the $500,000 million and up, generally speaking, that's where most people, tend to be interested. And there's no real upper limit. We can do, very large projects. We can do a portion, of a large project. Some projects we do large percentages of, 20-30% of cost. Some projects we do 5 or 10% of cost. We're here as a value add tool. And you're going to have the best view of what that value add is. Is it $5 million on a $50 million project? Is it $5 million on a $20 million project? So wherever we can add value, that's really what we're interested in. We look at ourselves as a partner, with our clients, and we want to support them in ways that they want to be supported.
And kind of to wrap this all up, I mean, when it comes to more complex deals where it's in an opportunity zone, historic tax credits, TIFs, essentially the PACE Equity team has worked with all of that before, and it doesn't scare you off, and the more challenging the better, right, Ethan?
Yeah, the more challenging the better. And we've done projects with ground leases, tax abatements, historic tax credits, multiple lenders, 10, 12 sources of capital. That's great. We love those. And one thing you said earlier that I'll reiterate is that we like to be in these projects, early if we can, and just work alongside for the whole life cycle. If we close a transaction in 60 days, that's fantastic. If we close a transaction in a year, but we were an early part of the stack, we really helped to, put it together, work in fits and starts, that's great too. So it's never too early to be working with us, and we can add so much value throughout all parts of the project and transaction if we're getting involved early as well.
Well, thank you so much, Ethan. This was really good. I hope everybody got a really good overview. You've heard me talk about PACE Equity before, and now you heard from the legend himself, Ethan, about the advantages of PACE Equity. So thank you so much, Ethan. Appreciate you joining us.
Thank you very much. Really great to be here.